welcome to TheoTrade. This is Don Kaufman. It's October 16th, 2019, and you are watching the TheoTrade evening video. We're just a few minutes after the cash close, where earnings are kind of hitting their stride a little bit today. We've actually heard from Netflix. We've got CSX, IBM, a few others out after the bell. I'll get to those momentarily. But first, a broader look at markets. The S&P 500 today, well, the S&P futures down about 650. Oh, today was what I would have to term a slop-tastic trading day. I mean, come on, look at this advanced decline line. People, we've lost our correlated state in the markets. Effectively, we're seeing right now a 50-50 advanced decline line. That's what I define as slop-tastic in there. When you start to look at a marketplace that gets a little bit, kind of disconnected, you want to start to look at some of the major sectors. In this case, I'll look at the financials, but how much can you read into when the financials are down a very negligible amount? Or, for example, the monsters of tech. The monsters of tech. This is our conglomerate symbol that, of course, is Facebook and Apple and Microsoft and Google and Amazon, also relatively unchanged in today's trading session. Now, where do you go from here, the remainder of the week? Is earnings really going to drive this? Well, I actually am going to take a look specifically at the SPX to remind everybody, okay, that we still have a fairly substantial expected move on the week. Now, when I say the expected move, this is the SPX. And again, this is from last Friday's expected move. We were looking for a $51 move higher or lower. And again, I wanted to note that very, very specifically, you're looking for plus or minus, again, a $51 expected move. And as of right now, we're nowhere near it. And the reason that I will constantly remind people of this, especially like on the Wednesday night video, is that you can zoom out on this chart. Now, all I've done here in the SPX is I've been tracking expected move for years now. I mean, I can pull up like a 3-year chart. We're back now just about 3 years and have tracked expected moves on a week-to-week basis over the last 3 years. And there's all kinds of information that you can gather from this. One of the most, I think, straightforward ideas that you can gather from expected move is that in almost every single week, in literally almost every single week, okay, we touch at some point or exceed that weekly expected move. Now, yes, there are weeks like, again, just a few weeks ago that we just kind of meander in between and we don't necessarily touch it. But from a probability standpoint, there's an extraordinarily high probability, again, of touching or exceeding the upside or the downside of that expected move on any given week, which brings me to the premise of, wow, you got to be thinking about 3,020, okay, being the upper kind of band of the expected move, or all the way down and back to 2,920. I mean, we're talking about, again, a massive range. Now, a lot of people, don't worry about it. But listen, I'm telling you, these expected moves, look back week after week after week, and you will see us tagging the upper, okay, or lower band of that expected move. Therefore, it's Wednesday, but expect decent amounts, okay, of overall market movement, maybe a little bit more correlation on Thursday and Friday of this week. Now, okay, for the feature presentation here, let's actually go take a look at a couple of earnings here after the bell. One of the biggest ones that's out right now is none other than Netflix. Now, inevitably, people are going to say like, well, what were some of the numbers in here? I don't care. I simply don't care. What are the numbers? That doesn't matter. All I care about, okay, is order flow and how order flow is reacting. And one of the things that I will continually discuss is how that expected move really, okay, drives stocks around earnings. And when I talk about like expected move, all I kind of wanted to note on that front is right up here, right? We're supposed to see about a $30 move higher or lower inside of Netflix. Now, granted, right now it just froze the screen and I want you to see, all right, so Netflix closed at like 286. It's just shy of about the 210. Well, it's only $20 higher right now. Yeah, granted, but they also haven't had their conference call yet. And if you take a quick look at the chart, look at an intraday, Zoom in. Hey, look where it tagged. Couldn't be any closer to $30 on the button, people. I mean, it literally moved in the after hours from 286, shot directly to 318. On the button. Right there, yeah, there's a butterfly waiting for it. So in this particular case, well, the expected move, that kind of wins out. Let's actually take a look at another case. Let's look at maybe something that's a little bit more off the radar screen, which is CSX. Trains, planes, and automobiles. All right, in this case, it's pretty much just a train. So what are we looking for inside of CSX? Well, this one should have in and around a $3.50 move. As of right now, and again, everybody looks at these things and they think to themselves, that's not working, right? Because right now the stock is up what? Oh, about $1.50 here in the after hours. Okay, so the stock's up about $1.50, but it has room to move to be up about $3.50. Well, what has been some of the price action, okay, of CSX? Now, again, a reminder. Conference call. It's just kicking off right now. And if you take a look at the price action in here, yeah, the stock closed around 69 and it has had a high just shy of 72. It is getting there. Think about this. And by the way, as I'm saying this, stock, of course, is rallying. Think about this, okay, throughout the course of the evening and where CSX is very likely to trade come the morning. One of the most important things to denote as I look at these expected moves with you, it's not where we are right now in the after hours. Okay? It's where we're headed during the trading session tomorrow morning specifically. That's everything. Because if you've got an options position on, listen, you can't close it after hours anyway. And these expected moves, they drive order flow. That is all of the option contracts that are centered in and around, okay, all of this amounts to $3.50. And there's a high probability that CSX is driven to the edge of that expected move. All right, last but definitely not least, let's actually pull up IBM. It's a stock you kind of feel like has fallen off your radar maybe in more recent years, but IBM, what was IBM expecting? In or around about a $6 and change move. So we'll just round it up to $7. If you take a quick glance at this, that means that IBM should be trading higher or lower, about $7. You can see it actually trading to the downside. But what would be smack on the edge of the expected move? Well, that would be closer to about 135-ish, about 135-ish. By the way, each one of the products that I'm showing you, whether it's IBM, whether it's CSX, whether it's Netflix, I've actually got butterflies on all three of those. And in this case, I could use IBM right around, that 135 marker. And I just wanted to show you in the after hours, it has driven all the way down to about 136 and change. Nevertheless, have expectations that IBM gets driven, if you will, right to the edge of the expected move, maybe somewhere in around the 135 to the cash open tomorrow. Again, a reminder, trading around earnings, you got to know not just about the edge of the expected move, not just about a butterfly, but how, to actually construct the trade, how to allocate the trade, and how and what should be the percentage return in pulling some of these positions off, because it's all about numbers of occurrences. With that, again, anticipation is for considerable movement on Thursday and Friday of this week in the broader markets. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.